Whole life insurance. That's the topic of this InvestMinute in today's general finance lesson. How it works, is it useful, and why some don't like it at all. I'm Jonah. I'm one of the banking bros here at the Cash Compound, and I'm cracking the code today on this saving and insurance term, whole life insurance.
How my bills, 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 how my $100 bills.
Whole life insurance provides coverage throughout the entire life of the insured person. In addition to paying a tax-free death benefit, whole life insurance also contains a savings component in which cash value may accumulate. Interest also accrues on a tax-deferred basis. Whole life insurance policies are one of several types of permanent life insurance, meaning that they'll cover you for your entire life. However, whole life insurance is the most commonly purchased form of permanent insurance. So here's how it works. Whole life insurance guarantees payment of a death benefit to beneficiaries in exchange for a level, regularly due premium payment. The policy includes a savings portion, which is called cash value, alongside the death benefit. In the savings component, the cash value interest may accumulate on a tax-deferred basis. Growing cash value is an essential component of whole life insurance. Now here's why that's useful. Well, for one, it provides lifetime coverage. As with all permanent insurance, whole life insurance provides coverage until the insured's death. It provides cash value that you can use for loans or withdrawals or premium payments. You can withdraw or borrow against that cash value during your lifetime. It provides a guaranteed death benefit amount that is established when you sign up for the policy and stays the same while the policy remains active, even if you were to develop a sickness later in life. It provides predictable premium payments that are fixed or level at issue and will not vary over your lifetime, unless of course you choose the option where you'd like them to vary. And it provides tax-free loans. To be clear, if you withdraw more than you've contributed to the cash value, then you are taxed. But if you take a policy loan, then you can say goodbye to Uncle Sam. Now here's why some do not like this plan. The most common argument against whole life insurance is that it's more expensive than term insurance coverage. In fact, that's one of the only arguments. Some would say that you should rent your insurance instead of purchasing it for your whole life. I believe that to be a poor argument. Renting is generally less expensive than purchasing in almost any category. However, whole life insurance is different from term life insurance, which only provides coverage for a certain number of years rather than a lifetime. Term life does not have cash value or a savings component at all, and it only pays out a death benefit. Of course, only if you pass away within the term, which happens to only happen less than 2% of the time. So here are my thoughts. Why not both? If you're interested in a high death benefit coverage for a temporary period of time, then go with term insurance. However, this component of cash value can be very intriguing and very interesting. I happen to know for a fact that if you design a whole life insurance policy for the cash value accumulation and less for the death benefit, that not only can you access that cash value right away, but your principal contributions will continue to earn interest and accumulate at the same time. Some might call this the save and spend system. Now, we've made a video for this, and every inch of this process, they're located on our channel, and you should check a few of those out. Are you ready for it in under 60 seconds? Here's your whole life InvestMinute. Whole life insurance has a level premium and death benefit and provides a guaranteed benefit upon the death of the insured, regardless of when they die. Whole life insurance also has a savings component known as the cash value. Those funds are available with a guaranteed return, and at any time you can borrow from or withdraw from the cash value tax-free. This and the fact that whole life covers you until death, as long as you pay your premiums, offer clear advantages over term life insurance, which only pays out if the death occurs within a specific time frame. However, purchasing something guaranteed for life will cost you relatively more than renting that same thing for a term. Subscribe to this channel and join me for my next InvestMinute for a quick breakdown of private annuities.